Good afternoon, everyone. If you can hear me, see my screen, and see me and Sam, although that part's not as important, if you could just drop a note in the chat or the Q&A so that we know you can see everything. All right, I'm getting thumbs up. Oh, I love the thumbs up button. Perfect. Thank you. All right. Well, welcome everybody for this afternoon's home buying series webinar about complex loan scenarios and solutions. We're going to go over a whole bunch of interesting things that we've been seeing in the market, just, kind of how we critically think in order to help clients and realtors close on a transaction and what's in their best interest. And we're just going to share a little bit of that with you today. My name is Joanne Theriault-Fazio. I'm the Divisional Sales Director for Origin Point in the Midwest, a rate company. I've been part of rate companies for 19 years now, along with my partner, Sam Fazio, who's an SVP of mortgage lending here at the company as well. We are a husband and wife team. We've worked together for a really long time, and I feel like we've pretty much seen it all. So we're going to just kind of dive right into it. And Sam is going to kick it off and go over a VA scenario that he had recently.
Good afternoon. So when we're talking about VA loans, these are only going to be eligible for any veteran who is eligible to get a loan. A lot of great things with these programs is you can do these with no money down, no mortgage insurance, and depending on your eligibility, can potentially even waive the upfront funding fee. And they can be used multiple times. So it's a great program for anyone who has served in the military that is looking to take advantage of lower interest rates with no mortgage insurance and a lower down payment. Couple of scenarios there is number one thing that we're always going to do is when we're looking at doing the VA loan, we're going to talk to you as a borrower or your borrowers to go over so to make sure they understand it. But more importantly is when you do submit these offers, we're going to help talk you through it, as well as talking through the scenario with the listing agent as well. So there's a stigma out there that they're government loans and they're more involved as far as when it comes down to the inspection or the appraisal part. But in reality, all that the VA appraiser is looking for here is making sure that the house is in sound sanitary condition and it's safe. So there are certain things that have to be met, but for the most part, they're not going to be an issue as long as your house isn't the house that they're buying is in an unsafe condition. Now, where this comes into play in a lot of cases is just recently I had a borrower who the original lender that she had spoken to did not go over the scenario and talk to her, see if she was eligible for a VA loan. We ended up being able to have her put down less money on a house, get a lower payment, and then also avoid mortgage insurance and the funding fee. She was a disabled veteran, so she did not have to pay the funding fee. So the 5-minute phone call that I had with her ended up saving her $300 or $400 a month in payment, and then also had her putting down a lot less money than they had originally told her. So she was very grateful for it, and we walked it through, and we were able to close this thing within 30 days without any hiccups. So if you have if you're a veteran and have questions, let us know. If you're working with a client who is a veteran, if you're a realtor, be happy to reach out and talk to your client as a second opinion as well.
Yeah, and one thing to point out is like our VA interest rates they're significantly lower than the competition. It's such a great program, and you really want to work with a professional mortgage person who really truly knows VA loans. They don't all, some may dabble, but they really don't know them that well. So let's move on to some condo stuff. Sam?
So one of the biggest things that we're coming into in our industry that's becoming a problem are condos and condo approvals. That's a different seminar. We can always touch on that later. But if you are looking at a condo that has commercial space, we actually have an outlet for it right now through one of our proprietary programs that we can finance the homes with up to 60% of the space being commercial. So that's huge because a lot of other lenders and a lot of other programs don't allow for that. It's usually between 25 to 40% space, or 33% space. It's kind of that magic number. So if you do have a condo that doesn't fit the normal box and you're looking for someone who can finance it with more commercial space than is normally allowed, we do have a great program for that.
Yeah, and great call out too on the fact that we probably can do a whole webinar on condos, and maybe that'll be the next one that we do because there have been a lot of condo changes in general. So if you have condo questions, definitely reach out to Sam. He's happy to answer them. I'm going to quickly just talk about saving the day from an online lender who shall remain nameless. We had a loan officer on our team who had done a pre-approval for a buyer. When he started digging into it, the buyer had recently changed jobs, which normally wouldn't be a problem, except that the buyer's income was going to be largely derived from new commission, and you can't utilize that. So we would only been able to use the base. Even though the buyer was referred to the loan officer, they had a really good rapport. He said, well, I went to XYZ lender online and they said that they could do the loan no problem. So what ends up happening 10 days before closing, he gets a panic call from the real estate agent saying, hey, so and so lender is going to deny the client's loan, or they're now telling them that he needs to do all of these different steps. Can you help? And so he steps in, gives him the exact same scenario he had given him originally, which would said, add dad as a co-signer. We can still do a conventional loan. Not only were we able to save the day in that situation, but we were still able to meet the closing date, which was 10 days later, which is pretty unheard of. Obviously, there's an awesome team behind that gets everything moving very quickly. But that just shows that, we're doing our due diligence on our end and making sure that you qualify and that sort of thing. So we really want to make sure that, somebody qualifies, we're collecting everything up front, whereas an online lender really is not going to be doing that. All right. I'm going to turn it back over to Sam to talk about clear to closes.
So one of the things that can help you as a buyer or as a realtor or for your clients is getting a clear to close, or being able to put that clear to close scenario into the contract. And for the clear to close, what that means for you non-realtors out there is that's the time frame where you would need to get your loan commitment in place. And that means everything's been done between title, verifying your income, your assets, and the appraisal. So that you have a commitment now that when your closing date does come, you can move forward. Now, the speed and quickness of this is important in this market, because certain markets right now, you still have a lot of competition for buying homes, and this would be one of the terms as far as that a seller can look at as favorable. Now, the way that we accomplish this and we really make this happen is by doing a pre-approval and then upgrading your pre-approval to a fully underwritten pre-approval, a process that we call power bid. And that's already been pre-looked at by an underwriter. So we've already verified your assets, your income, and then really you're just going to end up being subject to title and appraisal. And excuse me. And depending on certain situations on how much money you're putting down, the appraisal can be waived if the automated underwriting system allows it. So this gives you the flexibility to get in there, get quick, and have better terms. So our agents have used this 7-day clear to close because with their pre-approved power bid as a term to get other buyers, other people kicked out of contracts, or just to come in and having a listing agent say, hey, I already spoke to the lender. These people are fully underwritten, fully approved. I don't see any issue with your house appraising. And actually, in certain cases, when we've spoken to the realtor, we can actually already tell them, hey, we already ran this through our desktop underwriting with your address. I don't even need an appraisal, right? So you get me title and we're ready to go, in that scenario. So very powerful, big way to do it. But it all starts with the pre-approval, reaching out, talking to us, getting your pre-approval in, and then having you upgraded, right, to a fully underwritten. And that's just you submitting your pay stubs, W-2s, and bank statements, and then we'll get that into underwriting and get that usually out within a 72-hour turn time once it's submitted.
All right, I'm going to dive into what we would call the creative thinker. I think we've been doing this for a really long time, so we do pride ourselves in, being able to think creatively when people's situations are unique, which we are definitely seeing more and more unique situations because of low inventory, people who own their current homes free and clear. Sam just talked about the power bid, which is a really great way to get creative to make an aggressive offer, but um, one webinar that we already do have up on our YouTube channel that you should check out is our whole buy before you sell webinar. That's a really great one that really fits into this creative thinker box. But what I want to talk about right now is utilizing your existing house as a cash out refinance when you own it free and clear, don't owe a lot on it, to pay off something else, purchase something else. So I'm working with a client right now who has a house she owns free and clear for over $3 million and wants to take a cash out refinance because she wants to take that money, do a non-contingent offer on a property in Florida to do a fix and flip, where she can turn around and make a significant amount of money on her fix and flip. So that is where somebody who doesn't have to take any money out of their investments where they're paying, 20% capital gains tax or something like that, or now they're, utilizing their assets when they could just leverage their home for a much cheaper interest rate that is also a tax write-off up to a certain point. So there is a lot of ways for us to get creative where we don't have to even do a mortgage on the property that somebody's purchasing. So I wanted to mention that for all of you who are thinking about purchasing that next home or an investment property, there are other ways in which we can leverage the equity on your existing property. And then I am also going to talk about the second opinion success story. Sam and I are fortunate to work with a lot of amazing referral partners and old clients, and just, have been in this industry for so long that we've really established ourselves as somebody who will give an honest opinion on for a second opinion. I had an agent give me a call, and she didn't like what her clients were being told by an out-of-state lender. We do lend in a lot of states, so sometimes we are the out-of-state lender. So you can't fault somebody for that. But if they don't know the market, that can be a problem. If they don't know what closing costs should be customary in a certain area, that can be a problem. But in this case, it was more about the interest rate. And so I'm just tagging it back to the VA loan, which was the first thing that Sam talked about. Because in this case, the person was doing a VA loan, and they were getting an interest rate that was a half a point higher with 1 point more in closing costs. So it was going to be so much more expensive for them off the bat. But one thing that that lender did not talk to them about was their marital status. With a VA loan, if you are borrowing with a non-spouse who's going to live in the property, you have to put money down. Typically, it's 12.5%. So they didn't go over that with them. They talked with me over the scenario and just what we put the offer in, and we timed it based on the fact they were engaged and they were actually getting married. So they got married and they closed 10 days later, and we were able to structure it so that we could still do that 100% financing on that VA loan. But if she hadn't thought to put them in touch with me, they would have run into a scenario in which they would have had to put down 12.5% without, basic private probably at like the 11th hour. And then they would have paid more in closing costs, and they would have paid more in interest rate. And we were able to, get all of that done for them just by her saying, you know what, my spidey senses are tingling, and I'm going to go ahead and I'm going to put them in touch with you. So that's one of the things we're here for, is that second opinion. And of course, if somebody is getting a great deal or it's something that we can't do, which is probably not going to be super common, like we'll let somebody know that as well. One thing we have on here is check our social media. It's at Theriault-Fazio Team on everything, but we're doing a national coffee giveaway for next month. And just really quick, we don't have a slide. Oh, thanks. Amanda put it in the chat too, the Buy Before You Sell webinar. Thanks, Amanda. One thing I wanted to have Sam talk about really quick is we launched a new product. Our product development team is amazing. They're always coming up with such great things. We will frequently post that on our social as well. We couldn't possibly post everything, but this program is on there. So he is going to talk about the Forget MI program really quick for you.
Yeah, so we just rolled out a new program that's called our Forget MI program. And this is going to be geared towards first-time home buyers who fall below 80% of the area median income. So those numbers are going to vary depending on where you live and what the income is for the county. So I'll kind of use an example here, and I'll use Lake County, Illinois. Anyone who is under $95,940 a year in qualifiable income um, is eligible for this program as long as they're a first-time home buyer. So the benefits here is that we can get your mortgage insurance waived. You need a minimum of a 660 credit score. And if we can get you to qualify using the normal desktop underwriting systems, um, this would work out for you. So in a lot of cases, this can end up saving people, 80 to $120 a month, depending on their loan amount and what their credit scores may be. So this is a very new program, and it's unique to the Origin Point family here at this point. So we're one of the, I think we are the only lender actually right now that is
Yep.
allowing or able to do this through Freddie Mac. And that's because they have confidence in the quality of loans that we normally generate for them, and are allowing us to do this with no mortgage insurance. So if you're a first-time home buyer or have a first-time home buyer who is looking for a better option as far as keeping their payments lower, this can be something that'll be really great for them. And the key here is qualifying income. So the example I'll use is if you're a W-2 employee who gets a base salary and commission, if we can qualify you on the base income, we don't have to add in the extra commission, right? So if you end up, if you're at an $80,000 salary and you're making $30,000 in commission, and you don't need that extra money to qualify, you'd still qualify for this program. So it doesn't exclude you from that if you're over, as long as you're qualifying with your base. Again, excellent program for anyone who's a first time home buyer. Now you can do this as a husband and wife, or significant other, and qualify, but one of you does have to be a first time home buyer on this program. So as long as one of you is a first time home buyer, that's fine. And the definition of first time home buyer is anyone who has not owned a home in the past 3 years.
Mhm. Yep.
So
So awesome program. We wanted to share with you since it's like new, hot off the press, but you can check it out on our social channels. And if anybody has any questions, obviously here is all of our contact information. Please feel free to reach out and we will let you know when we're doing the next webinar. But thanks for joining everyone. Oh, and the winners for the gift cards will receive an email and we'll send out some information after the event as well. So thanks for joining everyone.
thank you.